Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. The rupee slips to a record low, breaches 91 against the dollar for the first time ever. Sustained FPI selling and uncertainty over the US trade deal weigh on sentiment. The rupee is down 6% this year, which is the biggest fall among emerging market currencies. The Sensex and the Nifty decline after a broad-based sell-off. The Nifty drops below 26,000. Mid-cap sees sharper cuts. Finance Minister Nirmala Sitharaman tables the insurance amendment bill proposing 100% FDI in the sector. The regulator can set limits on commission for agents and intermediaries. Composite license not part of the bill. Opposition parties oppose the legislation, saying it will weaken state-run LIC. The government tables a new bill to replace the MGNREGA, India's flagship rural employment scheme since the last 2 decades. Guarantees 125 days of wage employment per household instead of 100. Also imposes 40% additional financial burden on most states. Opposition criticizes the shift from demand-based to normative funding and the government's obsession with renaming schemes, among others. Big positive for Vedanta. The NCLT approves the metal giant's demerger plan despite the government's objection to the plea over their claims of being put to risk. The stock up 3% after the NCLT clearance comes through. Quick commerce firm Zepto gets ready to go public. Sources say the company is likely to file papers with SEBI this month, hopes to raise $750 to $800 million. Fog in North India impacts travel plans. Over 100 flights impacted at the Delhi airport alone. 13 dead after multiple vehicles collide on the Delhi-Agra expressway as dense fog affects visibility. Delhi's air quality improves marginally but remains in the severe category. Ford will take a hit of over $19 billion, primarily tied to its electric vehicle business, and shift focus to hybrid vehicles. This is amongst the largest impairments taken by a company and a major reckoning for the auto industry's electric ambitions. President Trump files a defamation lawsuit against the BBC demanding $10 billion in damages, accuses the broadcaster of producing false and malicious depiction of President Trump in a documentary a week before the 2024 elections. Australian all-rounder Cameron Green becomes the most expensive overseas player in IPL history. Kolkata Knight Riders break the bank to shell out over 25 crore rupees, but Green will take home only 18 crores after BCCI puts a limit on salary for foreign players. Well, let's go straight to the top story this evening, and that is the rupee. It has slipped to another record low, breaching the 91 mark against the US dollar for the very first time. Now, sustained foreign fund outflows and uncertainty over the India-US trade deal continues to weigh on the money market. The rupee is weakened from 90 to 91 against the greenback in the last 10 trading sessions. In fact, the rupee has declined by 90% against the dollar in the last 50 years. In 1975, one US dollar would cost 9 rupees. In 1993, a couple of years later, after liberalization, the rupee weakened to 30 against the dollar. By 2013, the rupee had breached the 60 mark. In the last 12 years, the rupee has seen its sharpest decline, falling from 60 to 91 against the dollar. Latha joins us now with more on the fall in the rupee and its implications. Latha, the way that we've gone from 90 to 91, what do you make of that, as well as what the likely implications will be from here on?
The reason for the fall of the rupee is really capital flows. We have seen, persistent, consistent selling by FIIs of all hues. It's a 17 billion sellout year to date. And what we are now picking up is from December 4th, you would have seen the FPI data. Debt FPIs are also selling out. And this month, we have an $800 million plus, probably $850 million sell from the FPI debt owners as well. So that is the fundamental reason. One was expecting that when the trade data came, the sentiment in the market would improve, but it hasn't. It's clearly that the fact that there's, for instance, trade data, good or bad, Prudential at the end of the last day of the IPO would have sold the money it got for, spot today will be delivered day after tomorrow. So that sell would anyway happen. Therefore, we shouldn't be surprised that despite the good news on the trade data, there are some FPIs who are still on exit mode. Now, what has added to the accelerated pressure that we are seeing in the past 3 weeks is most importers were not prepared for a 90-plus situation. Therefore, they're probably mentally okay with a loss, with a depreciation of 3% annually. But more than that has taken them by surprise. And we are seeing importers hedging in a very big way. Almost every banker I spoke with said that, corporates are phoning us and asking for hedges, buying hedges or buying dollars. Likewise, even sovereign wealth funds, etc., who are in India, may not have thought of hedging all these days, but when you see a rapid fall, they also come to the market. That explains the accelerated pace that we're seeing in the last few days, but it's taken people by surprise. The only point is, why is the Reserve Bank not in? My own sense is that they want the rupee depreciation to correct the trade deficit, which apparently has worked. I mean, what is the big difference between November and October? The rupee was cheaper, and therefore perhaps exports did that much better, 10% better than in October. So that is working for the real economy. If the real economy is not hurt, but in fact helped by the rupee fall, perhaps the Reserve Bank cannot be faulted for the stance it is taking. The moment they see real economy, investment intentions, or something seriously destabilizing in the real economy, we should expect them to use some of the arrows in their quiver. But otherwise, I think at the moment it is working for them. It's not even going to increase inflation because inflation is at abysmally low levels. It seems a logically very good step to let the rupee find its own level.
Well, will we continue to see the RBI stay hands-off, or will there be intervention? We will have to wait to see. Lata, many thanks for joining us. Meanwhile, for the equity markets, a broad-based fall on the Lal Street, with the broader markets witnessing more pain. The Nifty and the Sensex fell 0.5% today, with the Nifty closing below the 25,900 mark, 167 points lower, 500 points lower on the Sensex. The Nifty Bank was down by almost 1%, and the Nifty Mid-Cap down by about 500 points today. The mid-cap index underperforming the blue chips this afternoon. Realty and bank stocks taking it on the chin. But let's talk about the IPO markets. Quick commerce firm Zepto is getting ready to go public. Sources say the company is likely to file its papers with SEBI this month and hopes to raise $750 to $800 million. Shruti is here with more details. Shruti, we were expecting this to happen earlier in the year, but it now looks like early next year.
Absolutely. Grocery delivery startup Zepto is preparing to file its draft IPO papers as early as next week. Sources tell me the company could look to raise $750 to $800 million via a confidential filing route. Now, the move comes amid strong operating momentum. Zepto's last fundraise, announced in August this year, valued the company at about $7 billion. Since then, order volumes and net sales value have risen 45% over the past 6 months, with the platform now handling nearly 2 million orders a day. Sources also tell me the company is working with a clutch of domestic and global investment banks, including Morgan Stanley, Goldman Sachs, Axis Bank and Motilal Oswal. There are also signs of improving unit economics. Burn has moderated, driven by higher store throughput, supply chain automation and lower customer acquisition costs. Sources add Zepto is sitting on a cash balance of nearly 7,000 crore rupees, potentially making it one of the best capitalized new age companies heading to the public markets. Remember, founded during the pandemic, Zepto has emerged as one of the fastest growing players in India's 10-minute delivery segment, competing with Blinkit, Swiggy, Instamart and Tata-backed Big Basket. Over to you.
All right, Shruti, many thanks for joining us. That's Zepto getting ready for its IPO. But the big story from Parliament, Finance Minister Nirmala Sitharaman tabled the Insurance Laws Amendment Bill in the Lok Sabha today. The bill proposes to allow 100% foreign direct investment into the sector. This is not new. It's been on the table for a while. It also imposes limits on commissions for both agents and intermediaries. That caused some concern. The bill seeks to allow mergers with non-insurance companies, but the composite license is not part of the proposed legislation. Opposition parties protesting in Parliament when the bill was introduced, alleging higher FDI will weaken state-run insurer LIC. Here's the Finance Minister introducing the bill.
Many of the points, sir, are very much a part of what the discussion could be on. And therefore, to object to the introduction, at the introduction stage itself, questions the legislative competence, and I don't think there is a question on the legislative competence of the government to bring this into this House. Commissions for LIC agents, very much a part of what we are going to discuss, and in fact, let me even give one point already on that. Fixing commission for LIC agents is already a part of the regulator in the sense that he fixes the upper cap.
Well, that is the Finance Minister. The government also tabled a new legislation to overhaul the MGNREGA, India's flagship rural employment scheme for the last 2 decades. Amidst opposition protests, that is, the new bill, the Viksit Bharat Guarantee for Rozgar and Ajivika Mission Gramin, mandates an increase in guaranteed employment days to 125 days from the current 100 days. The legislation also proposes a higher financial burden for most state governments. At present, the centre bears 100% of unskilled labour costs and 75% of the material costs. Under the new framework, 40% of the total cost will be borne by all states except the northeastern and Himalayan states and the Union Territory of Jammu and Kashmir. The bill also seeks to alter the process of budget allocation. The central government will provide a fixed allocation and states will lose the flexibility that they currently have to propose budgets based on anticipated demand. There were protests from opposition benches when the Rural Development Minister Shivraj Singh Chauhan tabled the bill. Higher financial burden on states was a key point of contention. Opposition lawmakers have also questioned the decision of the government to rename the bill by dropping Mahatma Gandhi's name and held protests outside Parliament. Rahul Gandhi says the Congress party will fight tooth and nail to oppose the bill.
पता नहीं क्यों जी राम जी नाम आ गया तो ये भड़क गए। महात्मा गांधी स्वयं राम राज्य की स्थापना की बात करते थे और उनके अंतिम शब्द भी हे राम थे। बापू जी का पूरा सम्मान करते हुए राम राज की स्थापना, हर गरीब को भरपूर रोजगार मिले, उसकी गरिमा को सम्मान हो, दिव्यांग, बुजुर्ग और महिला, अनुसूचित जाति, जनजाति, उनको और प्रोटेक्शन दिया जाए, इसके लिए ये बिल लेके आए हैं। 125 दिन की गारंटी है, गारंटी।
बिना चर्चा के, बिना इस सदन की सलाह लिए इस तरह से जल्दी में विधायक को पास नहीं होना चाहिए। गहन जांच पड़ताल और व्यापक चर्चा के लिए इसे कम से कम स्थायी समिति के पास भेजा जाना चाहिए और कोई विधायक किसी की निजी महत्वाकांक्षा, सनक और पूर्वाग्रहों के आधार पर न तो पेश होना चाहिए और न ही पास होना चाहिए।
And staying with Parliament, the government has also tabled a bill to open nuclear energy sector to private companies. The bill has been called Shanti, or Sustainable Harnessing and Advancement of Nuclear Energy for Transforming India. Now, this bill will allow private companies and joint ventures to build, own and operate nuclear reactors. This will effectively end the government's monopoly in nuclear energy. The government is also proposing to create a unified legal framework and allow 49% foreign direct investment. The new legislation will replace the Atomic Energy Act of 1962 and the Civil Liability for Nuclear Damage Act passed in 2010. The larger goal of the bill is to achieve the 100 gigawatts of nuclear power capacity by 2047. What has sparked a controversy is the clause on liabilities. The bill elaborates operators shall be liable for damage except those caused by grave natural disaster of an exceptional character. Liability is also exempt during any armed conflict, civil war, insurrection or act of terrorism. Up next, a big sigh of relief for Vedanta after the NCLT gives the metal giant's demerger plan a green signal. That and more when we return. You're watching Business 360. A quick check of some of the other headlines that we're tracking for you. A nightmare for commuters across North India as fog impedes visibility, leading to reports of accidents and vehicles piling up on highways. In a tragic incident, 13 people were killed after multiple vehicles collided on the Delhi-Agra expressway near Mathura. Several vehicles caught fire after the collision. The national capital remains in the grip of hazardous air conditions, even as the situation has improved slightly from yesterday. The AQI peaking to 383 early morning today. At least 100 flights were cancelled at the Delhi airport on account of the fog disruptions. Over 58 lakh names have been deleted from the West Bengal draft voter list on the back of the special intensive revision carried out by the Election Commission in the state. The poll regulator released the list earlier today. Out of the 58 lakh names deleted, over 40% have been marked as dead. The revision drive will continue until February 2026, with the final list expected ahead of the assembly elections next year. The Indigo Pilots Guild and the Federation of Indian Pilots have approached the Delhi High Court seeking contempt action against the DGCA over exemptions to flight duty time norms. The court will examine whether the regulator is liable, while the DGCA says it has the power to grant exemptions and that the relief is valid only till February. Vedanta soared 4% after the National Company Law Tribunal approved the metal giant's demerger plan. The green signal came despite the government's objection to the plea over their claims being put to risk. Ashmit is here with the details. Big relief coming in for the Vedanta group with the demerger plan being given the go-ahead. Ashmit.
Well, a big sigh of relief for Vedanta, a big win coming to them from the NCLT. The NCLT waving the green flag, granting the sanction to Vedanta's demerger scheme. Now, this is clearly a scheme where Vedanta was looking to split the company up into smaller, more industry-focused units, and that is a scheme that this NCLT approval paves the way for. Now, what's important is that this journey was not without its hurdles. There were objections raised by the government. The government had raised all of these concerns. One of the concerns that had been raised is that there are claims of over 16,700 crore rupees pending against Vedanta. The government's concern was that the consolidated single entity has a very large asset base, but that the smaller demerged entity will have a much smaller asset base, and therefore that would expose the government's claims to risks. Vedanta had responded by saying that even the demerged entity will have an asset base that would be 1.8 times the total government claims of 16,700 crore rupees. That's one. Another concern that the government had raised was with respect to alleged lack of disclosure. What the government had said is that there are amounts that are locked in litigation. There are disputes currently underway before arbitration, that the total payout by Vedanta could be anywhere between $200 million to over $1 billion, and that has not been disclosed to public shareholders. In response, Vedanta very clearly said that as per the law of the land, they're only required to disclose dues that have been confirmed by way of a court order or an arbitral award, not amounts that are locked in litigation. And there appears to be these arguments by Vedanta appear to have managed to break the ice with NCLT granting its nod for this demerger scheme. We'll of course now have to watch whether or not the government, by way of the MOPNG, chooses to challenge this before the NCLT.
Ashmit, many thanks. In international news, the Nasdaq is set to file plans with the US Securities and Exchange Commission to introduce a 23-hour trading day for stocks. According to Reuters, the move is aimed at tapping into growing global demand for US equities. Investor appetite for near round-the-clock trading has surged in recent years, prompting regulators to introduce new rules and approve extended trading proposals from major exchanges. Now, Ford Motor will take a $19 billion hit as it scales back several electric vehicle models amid slowing demand. The automaker will replace the fully electric F-150 Lightning with the new extended range electric model that uses a petrol engine to recharge the battery, and will scrap its next generation electric truck. Ford says it's pivoting aggressively towards gasoline and hybrid vehicles. This is amongst the largest impairments taken by a company and a major reckoning for the auto industry's electric ambitions. Fintech giant PayPal has applied to become a bank in the US. If it gets the approval, the move would allow the company to offer loans to small businesses and interest-bearing savings accounts to customers. PayPal, which also owns the popular payment app Venmo, already provides credit lines and has been steadily expanding its suite of banking-like services. The push comes as the fintech firms intensify competition with traditional brick-and-mortar banks. In fact, Amrish Rao of Pine Labs told me just a few days ago that customers trust fintechs more than banks today, given that more of their transactions happen on the fintech layer, and why he believes digital banks will be part of India's future as well if the regulator gives the go-ahead.
I believe that 3x the number of transactions that banks and financial institutions are doing are being done by fintechs in India. There will be serious competition. In fact, right now where I'm saying, when I'm getting to see that 3x the transactions are happening on fintech apps, I genuinely believe that we've already passed that argument. Consumers have given the answer that I'd rather operate with a fintech than operate with a bank or a financial institution. Going forward, if this gets opened up, there is a real chance that banks will then become warehouses of money, while the transaction layer would be with someone else entirely. So yes, I do believe that consumers have actually let it know that they would rather prefer a company which is giving them the best UX.
Well, digital banks, are they here to come? With that, it is time for us to wrap up this edition of Business 360. The news will continue right after this break. Stay tuned to CNBC TV 18. We're back in a moment with plenty more.